Hey everyone, welcome back to Corporate Decoder. Today, FSHPR just filed an 8K, and I am seeing an urgent warning sign that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing a potential delisting from Nasdaq, and this filing might just be the beginning of their troubles. Alright, let's dive into what Flagship Acquisition Corporation, or FSHPR, has reported. This isn't a typical financial results filing. Instead, it is an 8K, which is used for reporting major events that shareholders should know about. The big news here is that on the 17th of April of 2026, the company got a notice from Nasdaq. This notice is essentially a warning because they failed to file their annual report, the Form 10K for the year that ended on the 31st of December 2025. Nasdaq has rules about companies needing to file these financial reports on time to stay listed on their stock market. So, because they missed this deadline, Nasdaq has told them they are not in compliance with the rules for staying listed. This is a pretty serious situation for any publicly traded company. Now, Nasdaq is giving them a chance to fix this. The company has 60 days from the date of this notice, so until around mid-June 2026 to come up with a plan to get back on track. If Nasdaq likes their plan, they could get up to 180 days, so until October 2026 to finally file that missing report. It is important to note that this notice itself does not mean the stock is delisted tomorrow. The shares are still trading on Nasdaq for now, but it is a very clear signal that they are on thin ice. The company is saying they are working hard to get that report done. However, they also admit there is no guarantee they will be able to meet Nasdaq's requirements or stay listed. This lack of certainty is a big red flag for investors. When a company misses these important financial filings, it can create a domino effect of problems for investors. It makes it really hard to understand the true financial health of the company. Think about it this way. If you were trying to buy a used car and the seller couldn't show you the repair records or maintenance history, you would be very hesitant to buy it, right? It is similar here. This lack of transparency makes the investment much riskier. They also announced this news via press release on the 22nd of April. This is standard practice when a company receives such a notice. Generally, companies will issue a press release to inform the public about significant events, and this certainly qualifies. The filing also clarifies that this information, including the press release, is being furnished and not officially filed, in the same way as other parts of the report. This is a bit of a legal nuance, but it means they are providing the information without the same level of strict liability as a formal filing. They've also included the press release itself as an exhibit. This just provides the full text of the announcement they put out. And as with most modern filings, there is an interactive data file, which is basically a structured way to present the information for easier analysis by computers and software. The report is signed by Matthew Chen, who is listed as the Chief Executive Officer. This shows that the top leadership is aware and responsible for this filing. Now, let's talk about what this means. Missing a Nasdaq filing deadline is a serious issue, especially for a SPAC or Special Purpose Acquisition Company, like Flagship Acquisition Corporation. SPACs are essentially shell companies created to merge with another company and take it public. They have a limited time to find a target company and complete a merger. If they are struggling with basic reporting requirements, it raises questions about their operational capabilities and their ability to execute their primary mission. This situation is somewhat comparable to what we've seen with other companies that have struggled to maintain their listing requirements. For instance, remember how Bed Bath & Beyond faced delisting warnings and ultimately filed for bankruptcy? While this filing doesn't mean Flagship Acquisition Corporation is going bankrupt, it highlights a similar path of regulatory trouble. Companies that are delisted often see their stock price plummet because they move to over-the-counter markets, which are much less liquid and accessible to most investors. Historically, about half of microcap companies that undergo these kinds of delisting warnings eventually end up delisted. There is no guarantee that a $1,000 investment in a company facing these issues would remain above $100 after a delisting. The core problem here is transparency and compliance. Nasdaq requires these filings to ensure investors have up-to-date information to make informed decisions. When a company can't provide that information, it erodes trust. For Flagship Acquisition Corporation, this is a critical juncture. They need to rectify the situation with their financial reporting very quickly to avoid further repercussions, including the potential loss of their stock exchange listing. This is the primary risk I am watching. What I am actually looking for is evidence that they can swiftly and competently resolve this filing issue, which will be a strong indicator of their future operational stability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Did you find this breakdown helpful? Please like, subscribe, and join our Discord community.